Hi guys, welcome to the Savvy Money Show with me, your host Sean. We're outdoors again today, so I apologise for any background noise. And we're going through the Spaq penny stocks that I've picked up today. We start with Every Holdings, which is a game group. Has a massive amount of games on its books. 3.5 million shares in circulation, and it's gone between 1.5 to 15 pence a share, although it says $6 a share, because it was only $4.60. We'll include it. You'll see the reason why in a minute, because it's financials. It's debt to equity. These penny shares, and especially the Spaq ones, they usually don't have a good balance sheet. Now, its assets is 1.6 billion and its liabilities is 1.5 billion. Now, this company keeps adding new games and it keeps doing well. Whenever it brings in money, it keeps bringing out a new game. I think it's one, especially now, that we should be looking in. It's jumped 19%. It's based in Vegas because they think with the gambling industry going so high, this will do well on the back of it. Now, personally, I think this is one that, whether it gets a resurgence from the gambling industry or not, it's worth looking into. Alright, this is one that is 50 cents a share. Now, if you look at it, it's up and down. Now, again, we look at the financials first of all, and the balance sheet, because a lot of these genome companies, they're quite bad with financials. 28 million on the current assets, total liabilities 27 million, so it can pay off that with its current assets, pay off its total liabilities with its current assets, so don't have to worry about that. So a genome company that can pay off its liabilities, no problem. And we go back and we see that it's got a strong buy by Zach 2 months ago. Now, and just an update for you guys, and if you who didn't see my video earlier, if you haven't taken advantage of the links to pick up a free share with Trading 212 stake or free trade, now would be the time to do it with free trade, because not only will you get a free share, but you'll get entry into a free draw where one lucky winner will get a free Tesla share. Doesn't cost you anything. All you have to do is sign up via the link and deposit from £2 upwards. You will be guaranteed a free share worth up to £200 anyway, and you could get one for £1,500, worth £1,500. You know, so the sorry, $1,500. So why wouldn't you? The link's in the description below. Check it out, and don't forget to hit the like button. It helps with the YouTube algorithm, getting the video out to more people. If you haven't subscribed already, don't forget to smash that subscribe button. Become part of the Savvy Money Show family. You get to ask me to check out any stock you want, and we give each other updates and tips on stocks and shares. On with the show. Now, Jaguar Health. Now, I have gone into the background of all of these before as well, and there is a lot more to it. I suggest you do your own I suggest you do your own research as well. Remember, these companies are traditionally bad when it comes to their finance sheets, but you have here total assets 36 million, total liabilities 25 million. So I think it's, considering where it is in healthcare industry, these guys are coming out with some good good products. It is due to, analysts expect its income to rise 45% over the next 12 months, but because it hasn't risen so much in the last 12 months as they expected, they've its share price has gone down by 95%. And we head to Xeris Pharmaceuticals, who another pharmaceutical company who are quite cheap really, but we'll see why in a minute. We see their income, they lost 129 million, and their assets 109 million, but their liabilities are only 95 million. So again, I think, especially now, you're looking for a company where the assets outweigh their liabilities. That's the main thing. And once you've got that, then, or they have to have something extra special on their books. And when you look at, they gave some options to buy, and apparently everyone took them up. There was no one waiting around. They are the first ones in the market to have an auto injector that doesn't need a needle. So anyone they are marketing towards the elderly and children. So basically it hides the needle, and it's a bit like an EpiPen. It's already mixed in for people who have hypos, and that's just come out, so I think that will be a big market for them. Now we have Electrocore. This is a company which concentrates on the nerve for cluster headaches and things like that, but nerve stimulation, but they have a whole host of products. Now they are not going to be as good financially, but if you look at their liabilities, it's 10.5 million against 35 million. Their current assets can pay that off with 26 million, but they have a whole host of products as well. And look at the share price. Now we're going down to Tonics Pharma. Please do your own research on this, because these guys, just because they look good on the balance sheet doesn't mean they're going to be successful. It is 14.5 million against 5 million, and again the current assets outweigh the liabilities, total liabilities. And I think this one, that these are all ones that should be good. And in August is when their earnings come out. We have Dolphin Entertainment. There's been a lot about all these streaming services and entertainment recently. Now this one, its stock has tanked recently, you can see there, but a lot of them have, unless they are tied to another aspect. So what we do is, net income is 456, and You'll see from the balance sheet that you've got total assets of 42.5 million against liabilities of 33 million. So it can pay that off as well. And we go to Rigol Pharmaceuticals. This company I like. It's gone up a bit, which is, I don't mind. Some of these companies are going to go up. You're not going to get them at the bottom. The other ones you may get at the bottom because I've just let you know about them. But it's losing money, but it's gone up because news about its COVID-19 drug has come out, positive news, and they've gone run up. Now the total assets is 147.5 million, total liabilities 93 million, 94 million. So the current assets can pay that off on its own. But they don't just have this one drug, they also have a whole host of other drugs that are going through trials. So please do your own research, check it out, and I'll see you in the next video. Stay safe, stay savvy, stay investing. See you later.